This is Nightly Business Report with Tyler Matheson and Susie Garrett.
Hiring spree. Private businesses add more jobs than expected last month, increasing optimism about tomorrow's big employment report.
Tricks of the trade, strategies investors can use to find value in this record-setting market.
Side effects. Are discount prescription drugs not purchased at pharmacies safe? The results of a 6-month investigation. We have all that and more tonight on Nightly Business Report for this Wednesday, July the 2nd. Good evening, everybody. I'm Bill Griffith, in for Tyler Matheson tonight.
And I'm Susie Garrett. Good evening from me as well. Well, more Americans are back on the job, at the office, at school, at the mall, and at construction sites all across the country. And that's raising expectations for a strong June jobs report from the Labor Department tomorrow. Now, payroll firm ADP reported today that private sector employers added many more new workers than expected, and the most new jobs added in 1 month since November of 2012. Gains were seen in every sector of the labor market, with small firms, those with fewer than 20 employees, hiring the most. Hampton Pearson has more on today's encouraging numbers and what to expect in tomorrow's report.
One day ahead of the June jobs report, optimism among leading economists is at a 4-year high. The consensus forecast sees the economy adding 215,000 jobs last month, boosted by today's headline. The private sector may have added 281,000 jobs. That's according to payroll processor ADP.
It was everywhere. The gains were broad-based. Every single industry added to payrolls. Every company size added to payrolls. It was uniformly strong. And, you know, just looking at the underlying ADP data, it looks really, really good.
Market watchers are hoping job growth can sustain its momentum. The labor market has added more than 200,000 jobs in each of the last 4 months, the best performance since the late 1990s. It's a contrast to disappointing economic data showing a nearly 3% GDP contraction in the first quarter and less than expected consumer spending in May.
Well, the one wild card has always been the consumer. Nothing is really sustainable in terms of all the other components of GDP unless you have the backdrop of consumer spending, which means not only do you need employment, but you need income being generated out of that employment.
No hint from Federal Reserve Chair Janet Yellen today about how another strong jobs report might impact the Fed timetable for raising interest rates. Yellen telling an International Monetary Fund conference a big part of the Fed's communication strategy is to avoid surprising financial markets.
We will try to conduct our monetary policy to communicate about it and to conduct it in a manner that is understandable to financial markets, to avoid the kinds of surprises that could cause jumps in interest rates.
The jobs report is coming one day early because of the 4th of July holiday. Will there be fireworks? We'll have to wait for the numbers to find out. For Nightly Business Report, I'm Hampton Pearson in Washington.
It is all about jobs. We had more evidence of more small businesses taking on more new hires in the month of June. The National Federation of Independent Business says that hiring increased in June for the 9th consecutive month. That's the longest stretch of increases that we have seen since 2006. More than half of the small businesses owners surveyed by this group either made at least new hires or posted job openings over the last 3 months.
Turning now to Wall Street, it was a lazy summer day of trading, but there was still enough oomph for the Dow and the S&P 500 to hit new records. And the advances came despite disappointing economic news showing that factory orders in May rose much less than expected. Here's how the major averages looked at the closing bell. The Dow rose 20 points, the Nasdaq lost a fraction, and the S&P inched up by a point. Even with the Dow and the S&P standing at historic highs, Dominic Chu reports that investors are still finding value in the stock market.
Finding value in a stock market that sits at record highs can be tough, but it's not impossible. Investing philosophy and strategy are important. Oftentimes, it means looking for a few key characteristics to help find the right stocks.
Most important of anything I look for is earnings growth. Consistent earnings growth historically and prospectively. I have to know how a company's making money and how it's going to continue to make money and expand those margins.
That might be one of the reasons why investors have found favor in shares of computer chip maker Intel. It's one of the leading performers in the Dow Jones Industrial Average this year and has grown earnings per share by around 15% per year over the last 5 years. But while many companies are still showing signs of strength, picking when to get into the stock market can be tricky. Some experts are still waiting for the right time.
We've had 23 record highs in the S&P 500 in 2014. Don't let that sweep you up and make you shift to get more aggressive at this point in time. So I think diversification is the key across both asset classes and geographically going into the end of the year.
And that brings us to another key point. Investors don't have to be limited to just investing here in the U.S. Depressed prices elsewhere around the world could provide intriguing opportunities.
Right now, we're about 2/3 domestic, 1/3 international. And in the coming months, we're going to shift roughly to a 50-50. We like what we see in Europe. It's certainly slower growth than what you see in the United States, but I feel like it's kind of the early stages of a recovery, and it hasn't taken hold yet, but oftentimes that's the best time to invest.
In the end, many experts believe that taking a diversified approach to investing could be the right way to go. For Nightly Business Report, I'm Dominic Chu.
Investors today had their first chance to react to news that J.P. Morgan Chase chairman and CEO Jamie Dimon is suffering from throat cancer. Now, despite the company unveiling short, medium, and long-term succession plans, investors did sell some of the stock today. It ended 1% lower, making it the worst-performing Dow component. The 58-year-old Mr. Dimon says the cancer was caught at an early stage. It is treatable and curable through radiation and chemotherapy, and he plans to stay on the job.
Fees at J.P. Morgan and other global investment banks totaled $47 billion in the first 6 months of this year. That's the most since 2007. The 12% jump in fees from 2013 coincided with the surging stock market, which encouraged many firms to strike more deals, according to Thomson Reuters. The gains were highest in Europe, up 29%. That compares to just 6% in the Americas.
A big change at Fidelity Investments in the wake of stricter regulatory oversight out of Washington. The financial services firm is now telling U.S. clients who live outside the country they can no longer buy or trade mutual funds in their brokerage accounts.
PIMCO, the world's biggest bond fund manager, could use some oversight in its total return fund. It posted its 14th straight month of net outflows in the month of June, with another $4.5 billion in withdrawals. But PIMCO founder Bill Gross says there's nothing to worry about.
The tide comes in, the tide goes out. We think it comes in again. It's based on performance. The total return fund in the last several months is in the 85th percentile. For the year, we've returned close to 4% for bond investors. The tide is going to come back in again, and the total return fund will remain the #1 bond fund in the world.
In a statement, a PIMCO spokesman said the total return fund has outperformed its benchmark and many peers over the last 15 years.
Still ahead, if you buy prescription drugs either online or at a discounter and not through traditional pharmacies, will those drugs be safe? We have the results of a 6-month investigation coming up.
Americans seem to have a love-hate relationship with the big fast food chains. A new survey from Consumer Reports says all the signature meals at the biggest chains are the worst in their categories. So take, for example, McDonald's. It has the worst burgers out of 21 national and regional chains. KFC makes the worst chicken out of 8 chains in the survey. Taco Bell sells the worst burritos out of 8 Mexican fast food sellers. But some other national names came out on top. Chick-fil-A had the best chicken and Chipotle the best burritos.
Well, Facebook may be tops in serving up humble pie right now. The social networking giant is apologizing for conducting a psychological experiment on 700,000 unsuspecting users. They tried to manipulate members' emotions by sending posts to their news feeds with either positive or negative slants to see if they would respond accordingly. Facebook's chief operating officer, Sheryl Sandberg, apologized on behalf of the company, saying that the purpose of the experiment was, in her words, poorly communicated.
Target is making no apologies after asking its customers not to bring their guns into its stores, even where it's permitted by law. The retailer says it listened to both sides of the debate and decided that banning firearms from its stores would create a safer environment for shoppers and employees.
We begin tonight's market focus with a disappointing revenue report from Delta. The airline saw its revenues rise, but less than in previously forecast. It cited lower than expected international yields and lower business demand to Latin America because of the World Cup. That sent shares down by 5%, closed at $38.24, and other airlines fell in sympathy. Investors cheered, though, Constellation Brands as that company posted an earnings beat. The results were helped by its acquisition of beer maker Grupo Modelo. It also upped its full-year outlook. The CEO says it wasn't just Constellation's beer unit, though, that's been performing well.
We've been firing on all cylinders as a company. Our beer business is incredibly strong. Our wine business is strong. Our spirits business is strong. We had a great quarter. We exceeded expectations.
Constellation Brands up more than 2% today to $90.45. Boeing signed a nearly $3 billion contract with NASA to develop the core stage of the Space Launch System, which is set to be the most powerful rocket ever built, and it may one day take astronauts to Mars. Despite that news, though, shares of Boeing fell a fraction to $127.62.
Shares of Greenbrier popped on its earnings report. The railroad car maker upped its full-year forecast after it announced better-than-expected quarterly results, thanks to an increase in deliveries. The stock jumped almost 12% to $64.61. Shutterfly shares soared on speculation the online photo sharing service is putting itself up for sale. Reportedly, the company is working with a boutique investment bank, Catalyst Partners, but the discussions are at an early stage. The stock still jumped 15% to $50 a share. And Rackspace is taking a different path. This cloud service provider is reportedly considering taking itself private and is in talks with a private equity firm to fund the deal. The option to go private is said to have come amid 3 acquisition bids for the company. Shares rose more than 6% to $35.88.
Well, the high cost of prescription drugs here in the U.S. has caused some surprising and potentially risky side effects, with more Americans buying their drugs outside our borders. Is it worth the risk to play a kind of prescription roulette? Scott Cohn is with us now with more on this troubling story. Scott.
And it is not a clear-cut case, Bill. The drug companies say part of what you're paying for with the high prices is safety, which doesn't explain the low prices in other parts of the world. The alternative sellers claim they can get you safety too, but at a much lower cost. So is it cost versus risk? Here's what we found.
You are wrong, totally wrong.
We're not wrong. The prescription Lipitor we purchased undercover from this business in Florida and had tested is different from the Lipitor we got from a traditional pharmacy.
Hi, I need to get this filled.
But like just about everything else involving prescription drugs, this story is a lot more complicated than that. We had gone undercover to look at the explosion of what are known as facilitators, basically brick-and-mortar versions of internet pharmacies, offering prescription drugs at big discounts. They claim to be legal, but drug companies say they're exploiting a legal loophole.
We found these businesses all over the place here in Florida, where a lot of seniors are on expensive prescription drugs, but might not feel comfortable ordering them online. So the idea is I can take a prescription like this, and I can bring it in, they'll fill it, they'll ship it to my house at a huge savings.
Discounts as much as 80%, or so they claim. Some people, like this woman who wouldn't give her name, swear by these places.
People need to save money, and drugs prices are too high. It's simply economics.
But the National Association of Boards of Pharmacy says ordering from a facilitator carries the same risks as ordering from a website, and those risks, they say, are considerable.
Of the more than 10,000 sites that we've looked at, 97% of those sites are illegal or rogue sites and are operating dangerously.
Often selling counterfeit drugs, which is where this lab in Groton, Connecticut comes in. It's run by Pfizer, and we got rare access. Here, they can test a pill
with pretty much the push of a button. So this fails. It's like this is a counterfeit Viagra tablet that we ran.
Pfizer Director of Global Security Brian Donnelly is a former FBI agent and a pharmacist.
The big motivation here is patient safety. We want to make sure that when a patient gets a Pfizer medication, that they get a Pfizer medication, not some knockoff.
Some of what they're finding online is frightening.
They'll use things like brick dust to hold it together. They'll use wallboard, sheetrock to hold these things together because they compress well.
To see if the facilitators are any different from the online sellers, Pfizer agreed to help us put them to the test. We ordered brand name Lipitor at 4 locations in Florida, and we filled 2 more prescriptions at traditional pharmacies in New York and New Jersey.
I need to get this prescription filled. I don't know if I need the brand name though. I'm not sure if you have it.
The first difference is obvious, the price. The facilitators charged us, on average, $1.71 per pill. The pharmacies, more than 4 times that.
$182.74.
But when we got our shipments, there was another difference. The pills from the pharmacies are oblong, but look at the pills from the facilitators. They're round. We sent samples of each to Pfizer's lab, removing all the packaging to keep the test blind. Think you know how the test came back? Think again. According to Pfizer's own reports, the oblong Lipitor from the traditional pharmacies came back authentic. No surprise. But what about the round Lipitor that came in the mail? Turns out, according to Pfizer's own analysis, it's authentic too. Authentic Pfizer-manufactured drug product, the report says, but not intended for distribution in the U.S. That's right, Pfizer makes 2 kinds of Lipitor, the drug sold in the U.S. and the drug sold overseas at a fraction of the price.
I think a lot of people would be surprised that Pfizer makes more than one kind of Lipitor.
We make products around the world.
Pfizer's Brian Donnelly says the overseas Lipitor is the same drug and the same quality.
Whatever product Pfizer makes is going to be a top shelf product.
So what's the risk to a patient, beyond saving a lot of money, of ordering this way?
Well, the risk is any time you go outside of the U.S. System, you're circumventing a system that's put in place for your safety.
He says the higher price in the U.S. buys you the FDA and what he calls a closed system to keep out substandard or counterfeit drugs. It happens to also keep out the less expensive overseas Lipitor. And June Booty at Canadian Discount RX Services says that's what's really going on here.
We save a lot of money for a lot of elderly people. I have a lot of happy customers.
An attorney for 2 of the other facilitators we visited said they do try to make sure that they order from overseas pharmacies that follow similar standards to those required by the FDA. The owner of the 4th business says he requires all his suppliers to be licensed in their home country. Pfizer, meanwhile, points out that it has spent more than $7 billion in just the last 5 years to help people afford their prescriptions through an assistance program called RX Pathways.
Fascinating. So if somebody decides they do want to buy their prescription drugs online, are there steps they can take to make sure they get the real thing?
Well, they need to make certain, first of all, that they know that they're taking a calculated risk. But there are legitimate internet pharmacies. The National Association of Boards of Pharmacies does a check on this, and on their website, nabp.net, you can check out the internet pharmacies.
Okay.
All right, so Scott, I'm going to put you on the spot here. You've worked on this story for 6 months. You know everything there is to know about this now. Would you ever buy these off-market drugs because they're cheaper? Are you tempted?
Well, I think that anybody that's looking at the high price and wants to take their medication but can't afford it has got to look at this and look at the results that we found. But it still is a calculated risk. As Pfizer points out, as the NABP points out, they may send you good product one time and not the next. So if you don't check them out, you're taking a risk.
Fascinating story. Thank you so much, Scott Cohn.
Thanks.
And to read more about Scott's investigation, log on to our website, nbr.com. And coming up on the program, it's Nike versus Adidas. You've no doubt seen the 2 brands during the World Cup. Tonight, we'll see which is scoring on the global business stage in NBR's Ultimate Stock Cup. That's next. No matches today in the World Cup soccer tournament in Brazil, but the quarterfinal round begins on Friday without the U.S. after that heartbreaking loss to Belgium. But in the latest round of NBR's own Ultimate Stock Cup, two sneaker and athletic wear giants square off in the global marketplace. The U.S.'s Nike versus Germany's Adidas.
The swoosh is a global icon, and Nike is the largest sportswear company in the world. It was founded in 1964 as Blue Ribbon Sports by Phil Knight and his former track coach, Bill Bowerman. It's headquartered near Beaverton, Oregon. 2013 revenues, more than $25 billion. They formed Blue Ribbon when Knight brought home running shoes from Japan. In 1971, the company took the name Nike, the Greek goddess of victory. It soon expanded to apparel and equipment, and Michael Jordan still tops a Hall of Fame list of athletes that helped Nike change the footwear and fashion industries. At this year's World Cup, Nike outfitted 10 teams, one more than Adidas, but Adidas makes the official World Cup soccer ball. Founded in 1948, Adidas is headquartered in Bavaria, Germany. 2013 revenues, just under $20 billion. The founder, Adolf Adi Dassler, had been making athletic shoes since the 1920s. Adidas is also a game changer. It was one of the first companies to pay athletes and teams using its gear. The Adidas logo, 3 parallel bars, became known around the world long before there ever was a swoosh.
So, which sneaker and athletic apparel giant is the winner in this global rivalry? Is it Nike or Adidas? Let's ask Bert Flickinger. He joins us, Managing Director with Strategic Resource Insight Group. You made an interesting comment. You think Adidas makes a better product, but you vote Nike. Why?
Because Phil Knight, since he co-founded Nike, is like the Julius Caesar of sports. He conquers everything in sight. And this year, the last frontier to win is football or soccer. And Nike will eclipse Adidas' last salient strength and beat Adidas in worldwide soccer or football sales this year.
So what are you saying, that Nike is the more innovative brand?
Nike can be innovative. Nike's innovative. Adidas are both innovative. Nike can be mass manufactured at better prices. Adidas may be better quality, but Nike has better teams, better athletes, better sales, better growth, better margins.
It's that intangible thing we call brand. I mean, that's what attracts a lot of people to the product, right?
Factor.
Well, the coolness factor, right?
The cool factor, whether it's athletics, whether it's music, whether it's popular culture, Nike wins on all fronts, every major continent, every country, every consumer constituency worldwide.
Let's talk about China, because I guess Nike has a stronghold, but Adidas is moving in. It's a sort of a neck-and-neck rivalry there. Who wins there?
Ultimately, Nike will win because Nike will sponsor the Chinese ping pong team, the football team, the basketball team, the key athletes, and ultimately that's what catches on and what's cool with the kids.
Would we get the same answers in Europe? They wear Adidas quite a bit over there, don't they?
The Adidas three-stripe, to your point, Bill, is very popular, particularly in its home country of Germany. But Adidas has been around for 90 years and won for several decades. Nike, since Carolyn Davison developed the swoosh and was patented in '74, Nike's been coming on strong in recent decades. Better advertising, better marketing with Wyden Kennedy, and Nike wins on all fronts worldwide. But in Europe, that is the stronghold, as she referenced.
Right. So what happens when Nike chairman and founder Phil Knight steps off the field, so to speak? I mean, that point is going to come. Will you feel the same way about Nike and its innovation? It sort of reminds me a lot of the Steve Jobs-Apple connection.
It's an important consideration, particularly relating to Steve Jobs, because both were such inspirational leaders, great innovators, great entrepreneurs. Phil Knight's built such a powerful brand machine, as you referenced, Bill, but also a war machine to take down every type of competitor in every sport, every category. So that machine will continue for at least a decade after Phil Knight steps aside. And in his 70s, he's still going strong.
Yes, he is. So how do you view both as investments?
Investments, because of higher double-digit growth at Nike, increasing margins, Nike will be the ultimate winner. So while Adidas stock is trading in the ADRs at 100 today, Nike is trading at about 76. by the time the next World Cup comes around, both will be up, but Nike will be up significantly over Adidas. So for a short-term, long-term bet, Nike's the better investment.
Bert, good to see you.
Good to see you,
for your
Bill and
thoughts
Susie.
tonight.
Thank
Bert Flickinger of the Strategic Resource Insight Group. So you just heard what Bert said. We want to hear from you on this one. Which stock do you prefer, Nike or Adidas? Go to our website and vote at nbr.com.
And don't go away. Now the results from last night's Global Rivals Challenge, where we asked you to choose between General Motors and Toyota. The winner, Toyota. 70% of you voted for the Japanese automaker.
Finally tonight, did you use up all of your allotted vacation days this year? Have you yet? Chances are no. Nearly half of us didn't use all of our vacation days. There's a new study from Oxford Economics that says hardworking Americans leave an average of 8 vacation days unused per year. That's a staggering total of 429 million unused vacation days each year. That's more than 1 million years worth. Just think about that, and more than any other workforce on Earth. We just don't like to go on vacation.
We're workaholics. We're hardworking Americans, Bill.
I'd say we'd take tomorrow off, but no. Let's come back tomorrow, too, shall we?
Can't wait.
Exactly.
That's Nightly Business Report for tonight. I'm Susie Garrow. Thanks so much for watching.
I'm Bill Griffith. Have a great evening. We will see you tomorrow.
I'm Susie Garrow with a Nightly Business Report news brief. More Americans are back on the job. Private sector employers hired 281,000 new workers in June, the most in 1 month since November of 2012. This comes one day ahead of the government's June employment report. On Wall Street, trading was light, but there was enough oomph to push the Dow and the S&P 500 to new records, even though factory orders in May rose much less than expected. The Dow added 20 points, the Nasdaq lost a fraction, and the S&P inched up by a point. Target is asking customers not to bring their guns into any of its stores, no matter what local laws allow. And a new study says the average American skips 8 vacation days a year, totaling 429 million unused days off. Be sure to tune in to Nightly Business Report right here on your public television station.